Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday, as well as a great weekend. We didn't have a DMC yesterday, just due to the fact there wasn't a whole lot of movement. So I want to talk a little bit about what may transpire today. So for those of you new to the channel, do me a favor, click that subscribe button so you get the alert as they come available. So let's go ahead and dive right in. So the S&P this morning, yesterday I didn't put out a DMC, but I did put out a potential breakdown below the 2694. We did not break below there. Matter of fact, we rallied up from that region. Had a little bit of a pullback last night after the Google earnings, but not enough to really drive it down. So if you want to try to get long again, we have gotten a little bit of a rally. There is an opportunity here on the 15-minute chart. So this 15-minute level that we have is this little bit of basing right through here. It's also the area that was old resistance in the past, right? Old resistance oftentimes becomes new support. And so this 2713 by 2708 would be our next area. When I go to the 4-hour, I really have plenty of room for price to continue to go higher. I don't have any overhead supply of any strength for quite a while. So the overhead supply doesn't come into play until this 2769 area up here. So there's plenty of room for price to kind of continue its upward movement. I know a number of you took our breakout long trade that we had in the Russell. So if you took that, then it's continuing to move up your way. Check our trade update for where to move the stop and to adjust the trade. That's the reversal level, though, on the S&P. On the NASDAQ, that same level, we've got this little wick over wick area here on the 1-hour chart. High wick up here, and that was really the Google earnings announcement, that we came down from, but we were unable to get into our entry point. So that level also still very valid, and price is continuing to run. We have not, however, whereas in the S&P we put in new highs, as in the Russell we put in new highs, in the NASDAQ we have not. So in the NASDAQ we've not put in these new highs, and so really your stronger market, when I go back to the 1-hour chart, you can see that we've gotten above these 3 p.m. highs in the S&P. We have not even come close in the NASDAQ, so just keep that in mind. Slightly weaker when you look at the reversals. In crude, nothing really to add. We've been in between these two levels for quite a while. I'm going to leave those levels kind of in place as they are. There's really nothing to add to that one. No strong breakouts or reversals one way or the other. In gold, we are still below our potential 15-minute level. So we've got a 15-minute level here. Now, this is a little wick over wick area on the 1-hour chart. So it's the wick over wick on the 1 hour, but it's really was found on the 15-minute. And it's this little bit of basing before a nice move away. One of the things I do want to see is a little bit more strength coming into it. Over the last few candlesticks, we're seeing some selling pressure, and that selling pressure as it's coming in is a little bit disconcerting to see, are we even going to make it all the way up to here? And if we do, then there's, I think there's plenty of room for it to kind of continue its move down. We need a decent arrival into this level. Moving over to bonds and our currency markets. So in bonds, I know a number of you took the bond breakdown, so great job on the bond short. We had a breakdown trade below this area here, and so a number of people got in on that one, and it's moved down nicely. We actually took some off the table once we had a nice reward to risk ratio. And so for those of you that are still in it, there's still room for price to continue to fall. As far as coming back up and an opportunity to get short, I looked once again at this little wick over wick area here on the 1-hour time period. That would be the area to look for. In the Aussie, we had a nice reversal level up here. There was a confirmation trade. Prices moved down nicely out of that area. Came back down to the big speed candle, retraced that entire speed candle, and that's where we reversed and started to head back up. I didn't really have the speed candle as my entry. Mine was a bit lower than that, and I'm still waiting on that level. I'm going to hold that level in play. I think that one's still an okay zone, and so we're going to leave that one in place. There's a chance that we'll continue to retrace back down out of where we are, So for those of you that are a bit more aggressive, this 726, 727 area here may be a decent point where you see a potential reversal. Okay, on the euro. So in the euro last night we had a breakdown short. So we did a live trading room last evening and talked about this as a potential breakdown trade. So for those of you that took that breakdown trade, it's moving, but it's not moving with a tremendous amount of force. So take your stop, move it to break even, so that you have locked in. You've gotten rid of really any risk in that position. If you did not get short and you still want another bite at it, another chance, then you could have another chance right here. So, I say move your stop to break even if you took the breakout. That way you don't lose any money. If it does indeed retrace and come back up, you could have another opportunity to get short right in through here again. I'm just not sure it's going to make it back up to there. Typically, when those good breakouts, it won't retrace back to there. And then in the Canadian dollar, we're very much like crude oil, no surprise. We're in between those two areas. Next. Great British Pound and Japanese Yen. So the pound is coming into our confirmation long opportunity. We're actually into the area where it would be triggered, and your entrance would be if it comes back up above this blue line. We are not there yet, and if it comes down below about 13.7, then that would cancel that trade. So that's the way confirmation entries work. Price has to trade halfway into the level to activate the trade, and then we would get long as it comes back out and cancel the trade if it comes below here before entrance. In the Japanese yen, so in the Japanese yen, we had a small breakdown trade below this area. Got a nice little move out of it. So some people took some money off the table right away. If you didn't, then we're actually putting in a little bit of a basing, pattern here. There's a little bit of strength that's being formed, so just be aware of that. You may want to take some money off the table if you still have a little bit of a profit built in. So with that being said, a whole lot of market movement, over the past few days, but not a whole lot that has been decisive one direction or the other. The S&P is continuing its march higher, and so there's no reason to try to fight that overall, and I'm still generally going to be a buyer. But if you've got any questions, please send us an email, support@tradersarmy.com. Hope you guys all have an absolutely amazing day, and I will be back tomorrow. See you soon.